The Accidental Realtor. Sometimes success happens by accident. You're listening to the latest episode of The Accidental Realtor with Chuck Gallup and Steve Smith. I can't vouch for all the episodes, but this one's pretty good.
Hey everybody, welcome to this week's episode of The Accidental Realtor. No one got into real estate on purpose. It's always an accident. I'm your co-host, Chuck Gallup. With me is the other co-host,
Steve Smith.
that guy right there. We are ready to go. We're really excited for this week's episode. We've got a lender we work with on a pretty regular basis. Her name is Jackie LaLonde, and she has quite the resume of lending. I personally worked with her for probably the better part of 10 years, and Steve's been working with her a lot lately too.
Yeah, I didn't know who Jackie was up until we joined forces a little under a year ago, and she has been awesome.
Yeah, we're very, very excited. She's also just a very human lender, which isn't always the case, and I love how she presents stuff. And I've been on her podcast, and she's just a wonderful human on top of it. Very excited to get her in here. But as always, we're going to go through a couple things before Jackie joins us for this week's podcast. So just want to touch a little bit on a couple things happening in the market, like we always do. I think the big question, because we have a lender on, is what is going on with interest rates? What is going to happen with the Fed? What's going on politically, which affects everything going on? Jerome Powell, the head of the Fed, has now said that he is open to interest rate cuts, probably under tremendous pressure from the executive branch. And it looks like there may be some interest rate drops on the horizon. What do you think that's going to do to things, Steve?
Oh boy, Chuck, we have been talking about this forever. Everyone's been hoping for and thinking that the rates were going to drop. I mean, going back even a year and a half ago. But my opinion, Chuck, is that if these rates come down, with any sort of significance, if we get into the fives, it's going to be crazy. It's going to be crazy. I think we're going to see a lot of buyers and sellers come out of the woodwork and kind of take this as their opportunity, to make a change.
Oh, absolutely. Absolutely. Okay. And Jackie's going to shed a lot of light on this too. So the topic will kind of kick the can down the road just a little bit, but it's a good time to visit a discussion we've had several times outside of the podcast, before we had the podcast, particularly when things were in multiple offers. And the old cliche saying, and I hate cliche, marry the house, date the rate. And I just couldn't stand that. But that got a lot of traction during the pandemic. But what I took out of that is that the home you're going to get into today, and this isn't directly correlating to that saying, but it was during that time. The home you're going to get in today may not be the home you stay in for the rest of your life. So a lot of times when I'm working with first-time home buyers that have a limited budget, that really struggle with understanding they're not going to get everything they need. They need the good enough home. They don't need the home. Most first-time home buyers are going to have a kid in the first 5 years. That's what always happens. You get your home, okay, it's time to have a baby. You have your baby, now it's time to move up. What are your thoughts on that, Steve?
And that is so true, Chuck. You're touching on, I think, a point that a lot of people out there miss. How many young couples do we run into? And they do. They're referring to the home as their forever home. And I don't know if it's changed, Chuck, but I know when we got into the industry, the average time that one stayed in the house was like 5 to 7 years. Even the most ardent people that said, nope, this is my forever home. Like you said, they have kids or life happens and now they need to move. It's 5 to 7 years.
And you have to strategize for that when you're buying the house. It's a big piece of thing. Steve, you want to talk a little bit about leadership and relationships and how that factors in?
Well, so I think this ties in perfectly with Jackie today that we're going to have on here momentarily and some other guests that we have coming up. But relationships are so key to our profession in real estate. Actually, they're key to life in general. And I would argue probably most other jobs out there. But, one of the takeaways for me when I got into real estate is were it not for the relationships that I made then and still have today, I wouldn't have near the success that I've had. What do I mean by that? Right? There's a lot of people out there, I think, that become lone wolves and think they can do it on their own. Well, what's that saying? It takes a village. It takes a team. And so like the people in real estate, it's not just the people on our team, Chuck, as realtors, but it's the It's the lenders that we use. It's the title people that we use. It's the insurance people that we use. And you got to treat these relationships with people like you do people in your own life, right? You got to work on it. You have to be focused. You have to be intentional. You're going to have good times. You're going to have bad times. But at the end of the day, it's these relationships that you still have that are going to make all of us better at what we do. And you take Jackie, for example, and she'll be on here shortly, but, to have someone that we work with that we know we can call anytime and get answers at any time. We know that they're going to be able to handle the clients how we know they need to be handled. It's just, if we didn't have lenders like her, we'd be in a different spot.
Absolutely. Many of our vendors we've come across, and certainly on my side of it, are by trial and error. And usually you find out by error. You learn more by the mistakes and the bad
Yeah.
relationships and what you don't want to do than you do by having someone who's just perfect who lands in your lap. That's great if you're the lucky one who can do that. But generally, I've found out what I don't want to work with, and that guides my thinking on what I do want to work
Yep. But think of that. My takeaway with that is, you learn by error. How many people don't even learn by trying to learn, right? It's like they don't even make the attempt to begin with to try to get to know anyone, which is really kind of counterintuitive to what we do as a profession as a whole. I just don't understand that.
Yeah, absolutely. Well, with no further ado, with that amazing intro, I am so excited to introduce everyone to Jackie LaLonde from LaLonde. Let's let her,
Yes.
just coming up from the green room. Don't trip on the stairs, Jackie. Oh, she's literally coming up from the green room. That is the closest to non-internet green room I've ever seen. How dramatic.
What, my room?
Yeah, I mean, you literally came up from the green room. I mean, I expected just, there you were. But you came from the virtual room.
Well, yay.
Good morning.
Yeah.
Thanks for coming on the
Hi,
show.
Jackie.
Good morning. Thanks for inviting me.
Yeah,
Welcome to my house.
Yeah, thank you. It's lovely. She's never invited me in real life to her house, Steve. So this is as close you're ever going to get. And if you do show up, it's going to be Costco appetizers. I guarantee it. Be like, you guys are not worthy of
Definitely.
homemade stuff.
We're high class all the way, though.
I love the chandelier. Really
Yeah,
do.
thank you. Me too.
I'm a chandelier guy. Hard to believe, I know. So Jackie's also a mom. And you guys might not believe this, but your realtors, your lenders, they're actual people. I know, hard to believe. Jackie, how long have you
It's
done
true.
How long have you done this business?
I've been in real estate for 20 years.
Wow.
I don't look old enough, do I?
No. It's amazing for a 26-year-old. So you
I
have
know.
seen 20 years. In 2005, you got on just before the crazy era that everyone talks about, the big crash of
I did.
2008.
I actually started. Oh my God. I started in 03.
Wow. Okay.
So, yeah.
How did the 2008 market affect how you do business today?
Well, at that time I was building my business because I was kind of new. And as I watched a lot of lenders fail. They had these huge houses, they were making a ton of money. I remember this one guy in particular, and the bottom just dropped, and so many lenders, their houses went into foreclosure because they were making so much money, and then all of a sudden they weren't. So I kind of I observed, and because I was building my business, I didn't know anything different than working really hard and calling people and following up, and because that's just what I did. So honestly, 08, 09 was good for me, but I know for other people it wasn't. And so it really impacted how I run my business today and how we keep a reserve for events like that. So I'm really grateful that I had that time.
A lot of people argue that the mortgage industry created the whole housing crisis of 2008, 2009. What's your take on that? And what's your take on how you personally do better to help overcome that?
I have a lot of thoughts on this. There's a lot of talk about, oh, lenders did this, lenders did that, but when is a consumer responsible for their own action?
That's a
Did
really
they
good
not
take on it.
take the
Yeah.
time to review the documents that they were signing? So,
Really good.
yes, I do believe that there were a lot of shady lenders because I watched it and I saw it. And I think there was a lot of misinformation. So, lenders that didn't actually fully understand and they counseled their client a certain way. And then they found out later that the information that they gave them was incorrect. I saw that. So I don't think it was a bunch of lenders purposefully being dishonest that caused the housing crash. I think it was a combination of some just didn't understand what they were putting their client into, which is a total problem for the expert to not understand their products, but it happens. I think the clients should have read their documents and they should have also understood them. And also you've got title companies who they also don't understand the documents, but then they're the ones who are going over the documents at closing. So you've got all of these parties involved, and I don't think anybody was malicious. It's just it was kind of the perfect storm, you know? So
Jackie, you made a comment that kind of resonated with me. You said like 2008, 2009, you were doing just fine, right? And that is so
mhm.
different than what you hear other lenders say. And I don't know if it's them falling into the victim mentality, them having not done the things they needed to do to make sure that they were okay in rough times. You know what I mean? Because I think in the LO world, I think even the real estate world, it's like whether it's COVID or if it was the housing crash in 2008, there's this victim mentality and, oh, it's just horrible. And I think some of that is people buy into that, right? If everyone else is saying it's bad, it must be bad. But you just like, no, like you were fine. I'm not used to hearing people say that.
Yeah.
It's awesome.
Yeah. I didn't know any better. And it makes me work harder. It made me work harder at the time because I just I don't know. That's just what I did. I needed to.
It speaks to a lot of what we talk about in our team, and I want to dig into your team just a little bit too. And you're just a great team player.
Yeah.
But building a bulletproof business in any market is not riding the trend and not panicking on the news stories and not panicking maybe even on what's happened. We talked a lot about the the NAR settlement last year and how it was going to change our business. And I was panicked, full on lose sleep panicked. And I started preparing for it 3, 4 months early. And I think that helped us be bulletproof when it came to be. And most realtors have found it really didn't change. Actually, it improved our standing in general.
Mhm. I think it provided better conversations for you guys to have with your clients.
Yeah, absolutely. Absolutely. Well, let's
Yeah.
shift gears just a little bit if we can. I want to talk about what I've always loved about your business is what you bring in value to agents and training seminars you put on and your podcast, which I've been on. So talk a little bit about
Mhm.
what you see your business doing and what you think maybe you do differently and how you help agents, how you build your team.
Mm. Yeah. Well, we do a lot of things differently. And it starts with educating our client from the very beginning. So, whenever we have, somebody that comes in and is like, I want to understand how to buy a house, we educate them. And if they're not ready to buy a house today, we're going to tell them what to do to get ready. Or if we're working on a pre approval and we're doing what we call our mortgage planning meeting, I'm going to go through and I'm going to say, if you do these things, it's going to put you in a better position once you get your offer accepted. So it might mean keeping a balance on a credit card lower so that when I pull a new credit report, their credit score is higher, which then results in lower mortgage insurance, lower interest rates, etc. So we really take the time to educate our clients about all of the loan products available to them and also how they can be in a better position once their offer gets accepted on the house. We always talk about here's what not to do. These are the things that are going to cause a problem once you find a house and your offer is accepted. Don't do them. If you want to have a really smooth process, make sure you don't do these certain things. So we counsel our buyers up front, and that's a little bit different because a lot of lenders, they just shove a piece of paper at their clients and then they expect them to understand what it is. They don't go through different programs and why they chose this particular loan for them. They just shove a piece of paper at them. a lot of lenders too, clients come in and they go, I want a 30-year fixed rate mortgage. Do you know there's over 300 different loan products? So having like a knowledgeable lender who can counsel that client and say, here are some options, here's how you can save some money. Here, based on the goals that you're telling me, this is how we're going to make that happen. So yeah, there's just a lot involved, and most lenders don't take the time. They're just pushing sheets of paper at their clients.
So question for you off of what you just said. What number of loans, just ballpark, do you think end up being 30-year fixed rate mortgage?
Most of them do. About 90% of them end up being a 30-year fixed rate mortgage, especially right now. ARMs don't make any sense. Those are adjustable rate mortgages, and they don't make any sense right now. But you have different types of 30-year fixed rate mortgages. You've got your Fannie Mae, Freddie Mac, which are conventional. And then within Fannie Mae and Freddie Mac, they have like subcategories of loan products. Depending on like your income, you might have, if you're under 80% of the area median income, you're going to fall under Home Ready. It's one of the products. You might be able to be eligible for a grant through Fannie Mae. Maybe you're elderly and you're using just your assets to qualify on. We're probably going to look at a Freddie Mac asset dissipation program for you. So there's like these other programs that are within the bigger overarching loans. You've also got your government products. So government products are like FHA, VA, rural housing, where the government is providing the insurance on the loans. So yeah, so most of them are 30-year fixed rate mortgages, but there's like sub products within the bigger products. And then there's non-conforming,
Yeah. So I'm curious then, and I don't think Chuck or I would be surprised at you saying that 90% are the 30-year, but of the 10% that aren't, how much would you attribute that to you counseling them on what their options are? You think that other 10% might have also been leaning towards the 30-year loans, but they were able to hear the options that you were able to offer up, so they went that different route because of what you brought up to them? Or did they come in ahead of time already knowing they wanted something different than a 30-year?
It's usually counseling, and also it has to do with qualifying. So it might be like there's a DSCR loan, which is debt service ratio coverage. And the way to make that loan work might be a 20-year loan, right? And so it also has to do with putting the loan in an order to get it approved. So it might be a 20-year or a 15-year, 25-year. It really just depends on what they qualify for and the type.
Okay. Yeah. And what I love about Jack is she's a big advocate of go find your dream house, then call me last minute and get your it's very opposite of what most lenders do. She's like, just go find a house, we'll get it. Kidding. I think every podcast with a realtor and a lender is going to say, get pre-approved first. So we're not going to touch on that. You know the logic of it. Don't be an idiot. Get pre-approved first. Jackie, what I love about your business is most realtors, most lenders will say, we do business just a little differently than everybody else. And they don't. There's absolutely nothing different that they do. There's actually very little you can do that is truly different. But in the ways you do business that is just a little bit different than other people. So you don't give lip service to these concepts of spending time with clients, because I haven't allowed lenders say they do it. You actually spend time with clients. Let's talk about like that first meeting. Like, how long is that? What does that look like? What do you do that's just a little different?
Yep. So during our mortgage planning meeting, we spend about an hour together, 45 minutes to an hour. It just depends on how many questions that they have. And we go through different scenarios, and also we adjust those scenarios to be more in line with what their goals are and what they want to see. Most clients, they're all about payment. They're not necessarily about purchase price. So we talk about the variables that are included in the monthly payment, and then how to either keep those numbers lower, to get where they want to be. So we spend a lot of time playing around with the numbers so that they're comfortable with the payments. Then we follow up and we make sure that while they're out looking at houses, they have all of their questions answered. because something might pop up. Maybe they forgot about something. They just need a little more counsel. So we talk throughout the process. And then once their offer gets accepted, we get back together and we go through the paperwork on the loan so that they understand what they're signing. One of the things I did back when I first started, and the way that I learned about loans, because nobody really taught me, is I actually read the documents.
What a concept.
And I would go through each app. I know. I would go through the applications with the client sitting there and we'd read them together. And so that's kind of what we do to make sure they're fully informed and that they understand what they're signing at closing. I also check in every week.
Yeah. I'm going to call that different. And I mean, you really do check in every week. And that's the feedback I get from all our clients. Why you're one of our top lenders. I love it. Well, here's the softball question I'm going to throw your way. Let's talk interest rates. I know no one ever asked you as a mortgage lender what interest rates look like or what the prediction is. And before you and Steve and I were talking about some changes coming at the Fed. Jerome Powell, who's now currently like he's going to keep his job at least through his term, has announced that he now foresees that there could be a drop in rate cut based on the very interesting data we're receiving. So, what's your take on it?
Mm-hmm. Well, it's important to understand that the Fed does not directly impact mortgage rates. So consumers think that when the Fed drops rates 50 basis points or 0.5%, that means that mortgage rates come down 0.5%. And it's simply not true. Now, the last time the Fed cut rates a few times back in October of 2024, what happened was mortgage rates declined up until that point of the Fed cutting rates. Once the Fed cut rates, those improvements had already been built into pricing. Then after that, because there was some conflicting data, you saw rates actually increase. So it's the time leading up to the rate cuts that you see those price improvements in rates. I do think we're going to continue to see rates come down even after the Fed cuts rates in this scenario, opposite of what I was just saying, after the Fed cuts rates next month. But if we see any data that comes out that supports, higher inflation, stronger job market, you're going to see rates actually increase. And mortgage rates are based on feelings, not actual data half the time.
Exactly.
So, yeah. So if people feel like the labor market is strong, you're not going to see rates come down. So I think rates will continue to come down, but I don't think it's not in a straight line.
Yeah, that's a really good take on it. And I think people think that just because the data says we should do one thing, that's not necessarily how it's going to happen. And when the Fed does drop the rate, that's the overall rate. That is not the mortgage rate. I think people assume that the Fed is just going, yeah, this is the new mortgage rate, and all lenders need to lend at this rate. It's just an optimal rate. It's kind of a guide. And
it's the rate at which banks borrow money at. But mortgage rates come from mortgage-backed securities, which is different, entirely different. It does directly impact your car loans. If you've got a home equity line of credit, it directly impacts that. So there are certain loans that get directly impacted, but not mortgage rates.
Okay, so you heard it here. Jackie LaLonde today has said, no drop in interest rates. That's the headline. Just kidding. So, no, it's really interesting, and it's certainly people can check in with you because you do track the market closely, as you should. It's your job. But you have a very good...
And we have a strike rate alert. So what I do with my clients is they're all input into a software, and the software says, okay, well, based on what I input, so it's got their loan amount, current interest rate, the client can tell me, I want to hit a savings of $200 a month. Let's say it's that. The software tells me when average interest rates have hit that monthly savings for that particular client. So I input people all the time into this particular system. So then I can just let them know when their scenario might warrant a refi.
Okay. Makes sense. Jackie, it's always good to see you. Tell us how people can find you.
Oh, they can follow me on Instagram, TikTok, Facebook. My handle is mortgages x Jackie. Mortgages by Jackie, but Mortgages X Jackie. You guys can always call or email me too. I'll send over the info.
I love your content on Instagram, by the way. I keep forgetting to tell you that your shorts, your reels show up on the regular for me, and it's always just great little tidbits. So thanks for sharing that.
Thank you. Thanks for having me.
Yeah, thanks, Jackie.
Yes, so nice to see you.
All right. We'll talk to you soon.
See you later. Bye.
Isn't she delightful, Steve?
She is delightful.
Yeah. She's just a great lender. I'm so glad we're partnered with her. And we work with a number of lenders. She's one of many, but she is also one of few because, again, as I mentioned at the beginning of the episode, trial and error. We picked these lenders because some other lenders made some terrible mistakes. We don't want to work with that lender again.
Well, I think it's worth pointing out there's a lot of lenders that solicit our business, real estate agents' business in general. I mean, we kind of have a large choice or array of options, right? So I think the fact that we work with Jackie and a few other people, and it really is a testament towards how they treat their clients, treat our clients, and interact with us. Because unfortunately, the bar's set low in some of these professions, and there's a lot of loan officers. Chuck, you and I both know it. We never want to work with them. Yeah. So yeah, she's wonderful. I'm trying to think. I probably sent my fourth or fifth set of clients to her. Kind of a young gal, first time home buyer. She's engaged. He's never bought a home, and they had talked to some of my previous lenders in the past, and were probably only lukewarm with them at best. And the feedback I got back from them was Jackie is absolutely wonderful. That whole human piece and everything that she said was true. She just went over every form, explained all the options, and they loved it. That's what they needed.
And it's not just a sales pitch. Choosing your vendors of all kinds, whether it's your realtor, your title person, your lender, is so important. This is, it's very cliche to say, it's the biggest thing you're going to do in your life. And when you do your next one, it's going to be the biggest thing in your life at that point. Just because the rate is lower doesn't mean all those other line items aren't lower. Having a lender that can get it to the finish line, give you the best program, counsel you, help you through the whole process rather than click, 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 submit some docs and the rate look good, I'm going to run with it. It just doesn't make sense.
Well, it doesn't. It's probably important to touch on, right? We know that there's a lot of clients. We fall into this category ourselves as clients sometimes, is that everyone wants to rate shop. And, it's not to take away the importance of trying to save money, especially in today's age. But, to be able to work with someone like Jackie, who doesn't only offer good rates, but takes the time to explain things. And once you get to know her, knows that if there is a problem that comes up, she's going to problem solve it. She's going to involve the people that she needs to involve to make sure that that client gets to the closing line. And I think that's lost on a lot of people out there that just want to look at rate. Right?
Absolutely. Yeah. There's so much more to it. And leave it to the experts. Don't think you know better, Mr. Buyer. You, Mr. and Mrs. Buyer. Jackie does this for a living. She knows the numbers. She knows the program. She knows all this stuff. You're never going to know that to the extent. It'd be like getting in an airplane because you did flight simulator or you read a manual. It's totally different. She knows what she's doing. As do we, of course. We know what we're doing. Well, you know what you're doing. I don't know if I know what I'm doing.
Well, I think between the two of us, we get it figured out. So,
yeah, I've got Steve I can call for questions. So don't worry. You can also buy a house with me. I just call Steve. He tells me what to do. Line 406, remember, 2.7%. Okay. So, Steve, we're just about to the end here. And we always like to end with a little story, sometimes funny.
I think you've got a good one that you want to share.
Yeah, and I don't know how funny it is, but we're going through on the team. One of our agents is going through a purchase in Minnesota. When you write an offer on a home with an association, you get a 10-day statutory right of rescission from the day you receive the documents. And it was really interesting because this thing came together on July 17th, and on July 20th, and on July 22nd, and July 26th. By the way, we're recording this episode. It's nearly September. And so if it tells you how long this has been festering, but the agent kept saying, yeah, documents have been ordered. And there's a 10-day, the seller is required within 10 days to provide you. And this is the law. It's not just a policy, it's a law. within 10 days, give you the homeowners association documents so you can then begin your 10 days to review them. And during that time, anything you see that doesn't work for you, whether it's the budget, contentious meetings you see in their notes, whether it's rules that you can't live with, turns out they don't allow pets or they don't allow monkeys to be a pet monkey, and all those reasons that you can say no, and you can back out of that purchase agreement with that right of rescission, get your earnest money, and be done. So we've had an agent that's been asking and asking and asking, and the listing agent keeps saying, we've ordered them. We've ordered them. They're on the way. Steve, how many hours of conversations have you had with our agent about this?
Too much.
Yeah, me too.
4 or 5 phone calls.
Me too. And his mentor. So, I mean, there's 3 people on the team that have actively been working on this and sending emails. And so maybe it's not even a funny story, but finally our agent called and was told no one had ordered the homeowners documents. So he got impatient and he went to the office for the homeowners association, knocked on the door and said, I'm the realtor. Has this been ordered or not? It turns out it hadn't. So it led to a whole series of events where we eventually pressured this listing agent into getting us these documents. We just received them, I think, yesterday. We've been talking about a month and a half. Our closing date, I think, is maybe 7 days from now. We just got the documents.
Yeah, the buyer doesn't have the full 10 days to review the documents. Now, fortunately, most buyers don't necessarily need that. And in this case, it's going to work out fine. But yeah, just I think that's a great illustration of sometimes the other side not doing their due diligence, not doing what they needed to do. And it caused a lot of stress and got a lot of people involved in this transaction, me, that should not have been involved.
We're talking about relationships. And actually in our next episode, we're going to talk a lot about relationships. But this is a relationship business. And if nothing else, out of the sheer embarrassment of knowing I may see that other agent again, I'm going to make darn sure that I give them those documents or a really good explanation of why they didn't show up. What a clown show real estate can be sometimes.
Well, that was going to be one of the questions I asked Jackie, too, and we didn't get time to it. But, how important is it for the average good LO or the average good title person or the average good realtor to have someone that they can trust? Does she prefer working with an agent, whether it's us or another agent she's done business with, someone that she can kind of call out or maybe get a hold of after hours versus an agent she doesn't know who isn't doing what they're supposed to do? But to your point, I think that speaks to the relationship. When you have a relationship, you usually have the ability to call people out on, hey, what is going on here, versus someone maybe that you don't know, or you don't know how to get a hold of them after hours.
Yeah, we talk about that with the banks in particular, the big banks. Oh, I only work Monday through Friday. Sorry. Well, real estate happens on the weekends and in the evening. So you think I like it? No, it's when it happens. Do your job. Do your job. Well, we're blessed to have great partners like Jackie LaLonde in our circle, and it is great to have her on the podcast. She's always a great guest. I'm excited for next week's episode too. We're going to transition to that pretty soon. Looking forward to you get to meet Casey O'Toole for the first time. I'm excited. Bring him on. This has been your latest episode of The Accidental Realtor. Where can they find us, Steve?
Where do they find us, Chuck?
They find us on Facebook. They find us on our website, theaccidentalrealtor.com. They find us on all of our social media. So make sure to like, subscribe. We're on all the podcast apps. Make sure you check us out on Spotify, Apple, all that stuff. We're looking forward to seeing you on the very next episode of The Accidental Realtor, because remember, no one got into real estate except by accident. I've been your host, Chuck Collop, and our other host,
Steve Smith.
All right, we'll see you on the next one.
Talk to you later.
Thank you for listening to Accidental Realtor. Frankly, I can't believe you made it through the whole thing. Way to go. I'm your announcer, Rusty Gatenby. Chuck has me tied up and held hostage in his basement. No kidding. Please help me. See you next time.